single one of them has value. So the monthly chart on Bitcoin through the Bitfinex exchange, we're here, we're leveraging TradingView for our data source. And so if you're looking at this somewhere else, the data may be a little bit different. But the story that I'm seeing here, with what is developing right now, we have almost 2 million in volume for the month of February. We are 6 days into March, and we're sitting at about 180,000 volume today. So we started the month out with that bullish momentum. We came up and we retested the high of this structure. So literally, all that we could do at this point is identify this whole price line. This has been tested 1, 2, 3 times. It's not quite at a quarter level. We can make that more precise if we wanted to, and we could say, 11,500, just to keep it consistent with quarters theory in mind. Okay, so now we have one price level. So what is the next area of interest that we could look at? I'm looking at this monthly candlestick for more information, for another clue as per, where I could be looking at. But really, this $10,000 price, that is what catches my attention. So just by using the monthly chart and identifying the range that we're currently trading within, we've already built ourselves this zone where we could expect something is going to happen. We could expect that we're either going to see price break out to the upside within this month, or we're going to expect price to continue trading lower below this whole area. With us being still in the first week of the month, it's important that we come in and we consider the weekly data. With this candlestick that closed off the month of February, everything that we're seeing happen now, we're going to be printing this candlestick until March 12th. So there's still a lot of time for price to do whatever it's going to do. But the story that I'm seeing here, right now, looking at 10,500, where is that? It is literally the equilibrium of all of these weekly candlesticks. And so now this story is developing even more when we go down to the daily and we take a look at how the candles are developing. Everything that's happening on a daily basis, since that bullish week that we experienced, we had a lot of buyers coming in, but look at the volume on that. The volume is getting lower and lower for the amount of buyers that are actually interested in picking up Bitcoin. So once the volatility starts to decline and then we get a candlestick pattern like this, where right at our quarter level, we get the daily close with a bearish candlestick like that. What happened last time we had a candle like that? We experienced that movement below 10,000, a lot of momentum, big candlesticks on the daily, thousands of dollars, thousands of pips. And this is like the 1, 2, if you like to look at the market with like support and resistance, this was our resistance. This was where the supply was. So we could technically identify that range. And so now we've built our first zone, 11,750 to 11,500. We still have all of this extra room between current price and 10,000, that next major quarter level. So it's like at this stage, what could we really add? How could we increase the probabilities of being able to decide when it's time to enter the market? We could add on a moving average. We could add on a trend line. We could develop the chart to where it looks like this, on the daily. It's still fairly easy to read. We can see specific areas that we're looking at on the hourly, on the 4-hour. We are taking into consideration more than anything the candlestick formations themselves. And so with this daily candlestick printing like it is, if it closes around this $10,800 level, with this much momentum behind it, we could expect the probabilities of price continuing down in the next daily candlestick are much greater than seeing price engulf this and come all the way back up and then go higher. It's thinking logically. It's really just deducing, well, what's happening at specific price points. And I just want to highlight for a moment everything that's happening in between this upper zone, our little range that we built between the quarter levels. On the daily chart, look over here. Do you see all of these wicks? Do you see how the candlesticks are reacting within that whole range? We could literally go on any time frame and we could look and understand what happens every time we get to this area that is just below 12,000. And really, there was only this one time that I'm seeing where price was really above, that really came up and hit 12,000, aside from, when we were first in this whole range over here coming off of the high. But it's noticing these little tendencies, right? It's understanding the chart itself. It does take a lot of time. It takes that commitment. And with technical analysis, I mean, everything that we're doing today is just setting a foundation for what we're going to be able to do the next time that we look at the market. Because the more that you look at this chart, or any market for that matter, and the more you understand it, the more you come to realize that you can expect certain movements to occur at specific price points, looking for that price action confirmation, you can really go into your trades with confidence. And whether you choose to use indicators or not, there's so many different ones out there that we could consider: RSI, ADX, CCI, Bollinger Bands. But it's really understanding why you're choosing to use those tools. Because if you don't understand it, then what value does it really have for you?